What's going on, everyone? It's David with Sin City Crypto. I'm joined with Robin, and today we are talking about the Federal Reserve Chairman Jerome Powell raising interest rates by 75 basis points. He had a press conference about an hour and a half ago. We broke it down, listened to everything, and we're going to talk about it, what it means for you moving forward. Let's not waste any time and get right into it. The Fed raises interest rates. Here is what to expect. Now, Jerome Powell stated several times they will do what is necessary to bring the inflation down to their target of 2%. I can't tell you how many times he stated it. A lot of people were expecting that 2% level to move up to about 2.5%, 3%, but apparently they're not going to. 2% is their target. He also went on to blame inflation on supply shocks like the war in Ukraine, COVID lockdowns, and also China lockdowns. Now, their effective federal funds rate targets are as follows. They expect to be at 4.4% by the end of this year, so another 125 basis point hike, 4.6% by 2023, and finally 2.9% by 2025. He also harped on the jobs supply demand is off. It's about 2 to 1. They want to bring that closer to 1 to 1. And they want to bring the supply up to meet the demand. He goes on to talk about the FOMC in this meeting was split between another 100 or another 125 basis point rate hike through the end of the year. So there's 2 more meetings left. You have November 2nd and December, middle of December. Not sure exactly what date, but will we see 50 and 50? Will we see 50 and 75? It looks like they're split. And he talked about why they didn't raise it 100 like a lot of people expected. He said they looked at July and August in tandem, and that is what they brought them to the 75 basis point rate hike. And he also mentioned they didn't want to overreact. Now, their plan to shed the balance sheet. The plan is as follows: 90 billion in September, 90 billion in October, and another 90 billion in November. That is what is projected, but they are so far behind that if they did meet those levels, it would cause a complete shock in the markets. And what a lot of people were worrying about is mortgage-backed securities. So the Fed currently has $2.7 trillion worth of mortgage-backed securities on their balance sheet, but Fed Chair Powell ruled out dumping these mortgage-backed securities anytime soon. So if you're in the housing market, the mortgage market should give you a little piece of calm or a sense of calm there. Now, Robin, first and foremost, I expected 100, you expected 75, so no shock there. Do you think they should have gone 100? I mean, the core inflation did rise from July to August, month over month, and also year over year. Are you surprised, or do you think they should have gone to 100?
No, I don't think they should have gone to 100. If we're going to play the should have game, they should have started raising interest rates a year ago when we saw inflation over 5%, and they simply dismissed it as transitory. The fact that they're playing this late game now, I mean, what are the options? Increase it by 100 basis points and crash the market and potentially lead, equities into a deeper recession. That's kind of where we're at. And, they're still standing tall on this. We're not in a recession. The job market's strong. But, that's also up for debate as well. We have a halt on the influx of refugees into the country. We have tightening immigration standards. We have the boomers, retiring, the baby boomers retiring right now as well. So we're seeing the exodus of the largest workforce leaving the market. And, a lot of it was they took time off during the COVID lockdowns. They just never came back to work. And so at face value, the metrics that the Fed looks at for the labor market, I don't think there's enough people to fill the jobs. I don't think it's the fact that everyone's super excited to go to work. I just think there's less people in the workforce here in the States. And that's one. And then two, if you did raise the interest rate by 100 basis points, you would crash the economy. And I think
But
it's too late at this point. They're trying to slow the economy, not crash the economy. That's why they keep saying this soft landing. And to be frank with you, it's kind of been a soft landing, right? I mean, it could have been worse, right? I mean,
well, I don't believe the landing is over.
Discussions.
I don't think the landing has happened.
Here's the thing.
I'll put it to you that way.
There's ongoing discussions on whether or not we're in a recession, not only by politicians, but also by CEOs of major companies and banks. And, the mantra is shifting. People are starting to side with this, hey, we're in a recession. But there's still a lot of naysayers. So it's not a foregone conclusion that we're in a recession as far as from the opinions of some mainstream officials. And, the thing that I don't think anybody disputes is if 100 basis points would have crashed the markets, at least in the short term, and could have pushed that last domino over. So that way it wasn't just a handful of people saying we're not in a recession. It could have just been everybody like, okay, yeah, we all agree we're in a recession. That's what they don't want.
Now, going back to what Robin mentioned with the jobs market, what you got to understand is how this all plays into inflation, how it could be bad for inflation. The Fed has two jobs: prices, aka inflation, and jobs. If there's not enough people applying for jobs, what do the employers have to do? They have to raise their wages. They have to offer people more money. And what happens when they have to pay more money for employees? They're not going to eat that cost. The CEO isn't going to take any less money. And guess what they do? They raise their prices. And what do raise prices means? Inflation.
And layoffs.
It is a terrible, it's like the dog chasing its own tail. There is no end in sight, because if you do one thing, it affects the other thing in a negative way. And so we're in a situation here where no matter what they do, we're still in a mess up situation until I believe we see some of the macroeconomic on a global scale subside. Russia pulls out of Ukraine, the lockdowns across China end, at the supply and demand, whether it's from the jobs or from the just goods and services, brings more to a level sense than until then. I don't think
they did survey, and I don't have the metrics here in front of me, but there was a survey done with with a group of the largest publicly traded companies out there and forecasting layoffs in the future. And over 50% of the companies that were surveyed said that they plan to increase layoffs significantly in the coming quarter, in the next few months. So that is coming. This labor market ideology, where even with the labor market being down as far as the workers that we have now because of immigration and retirement, if there's mass layoffs, doesn't matter. That's gonna be difficult on the economy, and maybe the Fed's position. Maybe we do get a pivot if that happens.
And we already covered during the live show today, which, by the way, if you have not checked out our live show, would highly recommend you do that. We talked about Meta and Google starting to lay workers off. And so we're already seeing it. And this has been going on for the last 3 months. We saw Netflix lay people off. We saw a lot of these larger financial institutions laying people off. Shopify, Netflix. You saw
big layoffs.
Yeah, big layoffs coming. And so the crutch the Fed is standing on is employment, jobs. That is the whole reason people, high officials in our government refuse to use the word recession. Well, what happens when all these layoffs come and the Fed keeps tightening policy and unemployment numbers go up, excuse me.
Now, David, we're real quick. I know this is a federal interest rate segment, but what do you think the broader implications for crypto, since we're a crypto show? Like, what does this do for the price of Bitcoin in the short term and long term? What do you think this is? How do you think this is going to play out
as far as the Fed hiking?
Yeah, the Fed interest rate, what happened today, and the immediate cause and effect and long-term cause and effect on the price of Bitcoin?
So until we see the narrative switch from Bitcoin being a risk-on asset and correlated to stocks and NASDAQ, S&P 500, Bitcoin and crypto will bleed. It is currently a risk-on asset. People don't see it as a hedge against inflation. People don't see Bitcoin as a store of value yet. That narrative has not changed.
And you know what? Sorry to cut you off, but you know, we do another segment, another plug here, our street interviews. And let me tell you, going out there talking to just thousands of people, or walking around trying to converse with thousands of people, and you realize the lack of education or even just exposure to crypto.
And here's the thing too, in Las Vegas on the Strip, you don't just get people who live in Las Vegas, you get people from not just the US, from outside the US. So this is on a global scale. It's not just we're in a small hometown here in the Midwest of the United States and we're asking random people. No, this is people from England. This is people from France, Italy, Russia. I mean, everywhere. You can see people don't even know about it, let alone see it as a hedge against inflation or see it as a store of value. Now, what's going to happen as the Fed continues to raise interest rates? It strengthens the dollar against foreign currencies. And what happens to the Dixie, the dollar index? It goes up. What happens when the Dixie goes up? Risk on assets tend to bleed. That includes cryptocurrency and Bitcoin.
Side question here. Dixie goes way up, other currencies go down. Is that going to be bad for Vegas?
Yes, of course it's going to be.
You think we're going to get less,
absolutely,
less tourism here?
Of course,
and
because
I'm not even trying to be funny.
No,
like
100%.
Realistically, you think
the only good thing that a strong dollar against other currencies does is it makes our imports cheaper here in the U.S. and it makes anyone who has a lot of U.S. dollars, they want to travel outside to other countries, it makes that cheaper. But for other countries, for people coming from, let's just say Europe, and they use the euro, you used to be able to buy $1 with 90, or you used to buy $100 with 90 euros. Now you got to spend 120 euros to buy $100.
No, my dad was over for a dinner a couple of days ago, and you know, my moms are currently in Europe right now, so they're every year they go and travel, and he was discussing when is the best time to buy euros. He was like, hey, I'm about to buy a bunch of euros and stack them up for the next trip.
Hey.
And you know what I told him? I was like, hey, man, might want to wait a couple months. I was like, wait till November, December. I think that's probably the best time to buy euros. And he was like, oh, yeah? And I was like, yeah.
Well, because the European Central Bank is about to start printing euros to essentially subsidize people's power bills because it's so high. Now, here's another thing I took from the from Jerome Powell's speech. Is their projections for the entire year of 2022 for GDP growth is 0.2%, down from 1.7% earlier in the year. Guys, 2 consecutive quarters is the textbook definition of a recession, 2 negative consecutive quarters. We've already seen 2, we're about to see 3. And the number they're putting out, the 0.2, we'll see by the end of Q4 of this year, that number will be in the negative. So we would have seen on average a negative growth in gross domestic product, which is a measure of how strong the economy is throughout the entirety of 2022. So guys, we are in a recession. It's not going to stop anytime soon. Be smart with your money. Stay cash strong. Invest in stuff that moves inversely with the overall economy. There's not a lot out there, but if you prepare yourself and you have cash on the side, when we finally do hit rock bottom, which I don't believe we have, when we finally hit rock bottom, you will have the capital available to put yourself in a position during the next bull run, not just in crypto, but in the traditional markets as well. On a global stage, you'll be in a position to reap the benefits. So that's kind of the last thing I want to talk about. That's all we got. So huge news today. Come back tomorrow at 10:30 a.m. Pacific Standard Time. We will cover this more in depth as well. And on behalf of myself and Robin, we thank you so much for watching. We'll see you next time. Peace.